Let's now turn to property markets, which are expected to continue to rise under the expected ongoing interest rate cuts that Westpac's Lucy Ellis spoke about earlier. But for investors, the last several years of above-average rental increases might also have come to an end as lower migration rates take the edge off housing demand in our biggest cities. Australia's biggest online real estate site, REA Group, has just done its latest deep dive on rents around Australia. And its senior economist, Eleanor Creagh, joins me now. Eleanor, always good to chat to you. This is not great news for property investors. Not great news for property investors who need every reason to go out and buy new properties right now.
Certainly we are seeing a bit of relief for renters, though, on the other hand. So rental conditions really beginning to ease from the incredibly challenging conditions that we've seen over the past, really much of the past 5 years, with particularly in Sydney, high-end rents falling in a number of premium suburbs and falling by up to $350 a week in some high-end pockets. And really what this is showing us is that, one, rental demand has eased, as you say, with net migration pulling back, likely also rents reaching that affordability ceiling, with rents having surged over the past 5 or so years, really means that rental affordability has deteriorated incredibly, and renters quite simply can't afford to pay anymore and bid up rental prices. We have also seen that investor activity has picked up over the past couple of years, and actually rental investor activity is sitting close to a decade high.
So it's interesting because generally when interest rates come down, either the property values go up, which reduces the return, the rental return in percentage terms on those rates, the cap rate, if you like, that they'd normally talk about in commercial property. So what's happening now is that return, that cap rate, is actually coming down for 2 reasons. Number one, because prices are continuing to rise, but number two, because the actual rent itself is falling.
Yeah, so we're seeing that in some parts of Sydney, Queensland, Victoria as well, that rents are falling, but there are some pockets of the country where rents are still continuing to increase, and rents have certainly increased over the past year, even though they've pulled back a little over the past quarter in some suburbs around the country. So certainly when we're looking at rental yields, I guess for some they could be getting maybe less attractive with rents pulling back. But don't forget, we've seen a huge appreciation in rents over the past few years. For example, Melbourne, our most affordable capital city in which to rent, has still seen a close to $10,000 per annum appreciation in rents since the onset of the pandemic. And with property prices now appreciating as well, we are seeing that investor activity remains relatively robust, and certainly with interest rates set to increase further over the year ahead, we are expecting that activity from investors does remain at these relatively buoyant levels.
So riddle me this one. If the immigration rate, the net immigration rate is coming down, then rents are coming down. I totally get that so far. But then how does that go with the aspiration of the federal government and the Prime Minister to build 1.2 million homes between now and the end of the decade? It kind of, again, works against somebody wanting to go out and build more homes.
It's certainly a challenge, and we know that we've got a long way to go in terms of reaching those targets, although we have seen approvals and commencements broadly tracking in the right direction. We're certainly not where we need to be in terms of hitting that 1.2 million homes target. We're tracking at a kind of under 200,000 a year. We need to be tracking actually closer to the 220,000 a year mark. So we're still going to continue to have that supply deficit. And of course, you know, as you say, with the potential for rental prices coming back and immigration coming back, that might disincentivize some investor activity. But I think what we really need to see at the moment is activity from developers, and the key constraints there, of course, are higher materials costs, labour shortages.
Always great to chat to you, and many thanks for your time today.